Well, we've been talking about it all morning. The U.S., EU, and U.K. cutting off some Russian banks from the SWIFT messaging system. Steve Leisman is back with a look at why this matters so much to the global markets. Hey, Steve.
Yeah, hey, Joe. And inside Russia, where historic financial sanctions imposed on Russia already having a bit of a devastating effect inside Russia, with the ruble crashing to now it's just over 1 cent, a slight strengthening to the dollar, and the Russian central bank forced to raise domestic interest rates to 20% from 9.5%. The sanctions include, as Joe said, removing select Russian banks from the SWIFT financial messaging system and freezing Russia's $630 billion in foreign exchange reserves, prompting lines at banks to withdraw rubles. Also threatens runaway inflation and a severe recession inside Russia. The Russian stock market ordered closed today. The most painful of these sanctions for Russia looks to be the freezing of the $630 billion, what's called Fortress Russia foreign reserves. A G20 central bank has never had its assets frozen, raising questions of how well Russia previously prepared for this and systemic global risk outside of the country. Banking experts and central bank experts I spoke with said there's only limited Western bank exposure to Russia and ample short-term dollar funding and well-capitalized banks. But the sanctions and the war will mean higher commodity prices and inflation, a bigger hit in Europe than in the U.S. Of course, there's concern about possible counter-sanctions. The Russian central bank has already ordered Russians not to buy Russian assets from foreigners. That's a form of nationalization of those assets. Now, no one can be sure how this will all play out, where the U.S. already has high inflation. Futures markets continue to predict Federal Reserve rate hikes, but the prospect of a 50 basis point rate hike in March has plunged now to just 11%. Fed officials declined to comment when asked if they would be making any statements or providing any special liquidity provisions, though they are most certainly watching the situation warily for potential impacts beyond Russian and Ukrainian borders. Joe?